Now we will see one question based on classification of operating activities, investing activities and financing activities. The so many activities has given in these questions. We have to identify this particular is related to operating, investing or financing, okay, or it is related to cash and cash equivalent. Is it clear? So we'll see this one question. I'm giving you one question. You note down the question, pause the button and note down the question. Question is, classify the following into cash flow from number 1 operating activities, number 2 investing activities, number 3 financing activities while preparing cash flow statement under direct method or indirect method. So number 1 is purchase of fixed assets. When we purchase the fixed assets, this comes under which activities? Purchase of fixed assets comes under investing activities, okay, but because under investing activity, acquisition and sale of fixed assets, whether it's a tangible and intangible, dividend received, commission received, interest received, okay, dividend received, interest received, this comes under the investing activity. Purchase and sale, acquisition and disposal of fixed assets. So purchase of assets, fixed assets comes under which activity? This is number A. Number A, this is purchase of fixed assets. Purchase of fixed assets. This comes under investing activities. Here I have written operating, investing and financing. So number A is under investing activities. B1 is issue of share. When the company issue the shares, it comes under financing activities, because you know the definition of financing activities: change in the size and composition of owner's capital and borrowed capital. Change in the size and composition of owner's capital and borrowed capital, plus dividend paid, interest paid, okay. So issue of shares, this comes under, B will be under the financing activity. Issue of share is financing activities. Issue of shares, financing activity. Issue of share capital, it comes under which activity? It comes under financing activity. Third one is payment of income tax. Payment of income tax comes under operating. This is the last item. After knowing the operating profit before change in working capital, thereafter we adjust the working capital, then finally at last we pay the income tax after adjusting the refund of tax. So income tax payment comes under the operating activity. Income tax, payment of income tax, this comes under the operating activity. Payment of income tax, this comes under which activity? This comes under operating activities. Payment of income tax, okay, comes under operating activities. Next is payment of dividend. When we pay the dividend, it comes under financing activity. Payment of dividend, whether it's on equity or on preference shares, it comes under financing activities. But receiving dividend, is investing activities. So payment of dividend, when we do the payment of dividend, it's an outflow of cash under the financing activities. Payment of dividend comes under financing activities. Payment of dividend comes under which activities? Financing activities. Next is payment of interest, whether it's on short term loan or long term loans or borrowings. Payment of interest comes under the financing activities. It comes under point number it is D, it is E. E is payment of interest, payment of interest, whether on debenture or on public deposit or short term borrowings or long term borrowings and loans. If you do the payment, it's a financing activities. Sale of long term investment, and when we sell the long term investment, it comes under the investing activities. In investing activities, acquisitions and disposal of fixed assets and non-current investment, okay, including plus dividend received and interest received. So sale of long term investment, it's a inflow of under investing activity. This is point number F. Sale of long term investment, long term investment, this comes under the financing investing activity. Under investing activity, it is a inflow of cash. It's a inflow of cash under investing activities. Interest received is also interest received, point number G. Interest received is also investing activities. Interest received coming under the investing activity. Whatever the amount we have invested in other companies' borrowings or loan, on that amount we get the interest, that is our investing, coming under investing activities. Inflow of cash and cash equivalent under the investing activities. Dividend received is also investing activities. GH, dividend received. Dividend received is also investing activities, okay, means this is a inflow of cash under investing activities. Repayment of long term loans, when we pay the long term loans or borrowings, it comes under the financing activities. It's a outflow of cash and cash equivalent under financing activities. So repayment of what? Repayment of long term loans, long terms loan. This comes under the outflow under the financing activities. Cash outflow under the financing activities. Is it clear? Now come to the next question. Based on identifications of operating activities, whether it's operating activities, investing activities, financing activities, or cash and cash equivalent. This question is based on identification. So question is identify the following transactions as belonging to operating activities, investing activities, financing activities, and fourth one is cash equivalent, means cash and cash equivalent. Okay, so number one is, first one is interest paid. When we pay the interest, it's a financing activities, comes under financing activities. Interest paid, number one is interest paid. It comes under financing activities, interest paid. So I am writing below the financing activities. It comes under which activities? It comes under all financing activity. I will write it over here. Investing activity I will write it, and operating, and at last cash and cash equivalent. So interest paid is financing activities. You know that under the financing activities, which item comes under the financing activities? Financing activities means change in the size and composition of owner's capital and borrowed capital. Okay. Number two, dividend paid, interest paid. This comes under the financing activities. So interest paid comes under the financing activities. Second was an interest paid on long-term loans by, they are the two. A is finance company, if it is a finance company, B, and second one is B is non-finance company. So in second transactions, there are the two cases. One is for finance company and another is for non-finance company. So interest paid on long-term loan. If it is a finance company, then interest paid on long-term loans comes under which activities? Comes under operating activities, because it's a main operating revenue generating activities. Main means revenue generating activities of a finance company. So 2A, interest paid on long term loans by finance company. If it is a finance company, then it comes under the operating activities, because this is the main revenue generating activities of a finance company, interest paid. And same is for non-finance company. If the interest is paid, then it comes under the financing activities. It comes under the financing activities, means 2B will come under the financing activities if it is a non-finance company. Interest paid on long-term loan by non-finance company. If it is a non-finance company, if it is a non-finance company, then it's a financing activities. Next is interest received. Interest received comes under the investing activities. Interest received comes under the investing activity. This is point number 3. This is 3. Interest received comes under the, when we receive the interest, it means we have invested the amount somewhere else, so we may get the interest or may get the dividend. So it's a investing activities, coming under investing activities. Next is interest received on investment by a bank. if bank receive the interest on investment, it's a banking company, then it's an operating activities because it's a main revenue generating activity of the bank. Interest received on investment, then it's a comes under the operating activities. Operating activities, interest received on investment by banks. Bank is a financial institution, and when the interest received on the investment, it's a main revenue generating activity of the bank. So interest received will be under the operating activities. Next is interest received on investment by a manufacturing company. If the manufacturing company received the interest, then it's not their operating activities. It comes under the investing activities. This will come under the investing activities when interest received on investment, by a manufacturing company, by a manufacturing company, then it becomes the investing activities. But if the interest received by a banking company or financial institution, then it's an operating activities. Next is dividend received is coming under the investing activities. Dividend received will be under the investing activities. Dividend received. Next is dividend received by a mutual fund company. Then if the same dividend which is received by a mutual fund company, then it's an operating activities, because mutual fund companies, the investment is their main revenue generating activities. Investment, purchase of investment and sale of investment is the main revenue generating activities, and related to that any interest or dividend received, then that comes under the operating activities. So number 7 point is what? Dividend received. This will come over here because it's a coming under the operating, because it's a mutual fund company. Dividend received on investment by a mutual fund company. For them it's an operating activities because it's the main revenue generating activities of the mutual fund company. Investment and sale of investment, and interest related to that and dividend related to that will be under the investing operating activities. Next is purchase of investment. When we purchase the investment, it comes under the point number A, investing activities. Purchase of investment comes under the investing activities. Okay, what are the things comes under the investing activities? Acquisition and disposal of fixed assets, whether it's a tangible or intangible. Similarly, purchase and sale of investment, dividend received, interest received, this will come. So purchase of investment is a investing activities. Okay, next is purchase of investment by a finance company. If the finance company purchase the investment, then this will come under the operating activities because it's a finance company. Purchase of investment by a finance company. Purchase of investment by a finance company. It's a finance company. Purchase of investment by a finance company. then it comes under the operating activities. Purchase of investment by a finance company, purchase of investment by a finance company, then this will come under the operating activities. Next is purchase of investment by non-finance company. If it is a non-finance company and investment is purchased, then this will come over here in the investing activities. Purchase of investments, purchase of investment by a non-finance company, If it's a non-finance company, then this will come under the investing activities. Next is bank balance. Bank balance is cash and cash equivalent. This will come over here, point number 11. This one is point number 11. Bank balance is cash equivalent, cash and cash equivalent, bank balance. Is it clear? This will come under the cash and cash equivalent. Short term deposits in bank. Short term deposits in bank means less than 3 months, where the risks are insignificant, then this also comes under the cash equivalent. Short term deposits, in bank, this will come under the cash and cash equivalent. Next come under the bank overdraft. Bank overdraft coming under the financing activities. Bank overdraft, cash credit, this comes under the financing activities. So bank overdraft, it is increased then inflow, and bank overdraft, if it is decreased then outflow of cash and cash equivalent. Similarly with the cash credit. Marketable securities is cash and cash equivalent. Marketable securities is It's a short term investment. Marketable security is cash and cash equivalent. Is it clear? Cash and cash equivalent. Any doubt? So is it clear? So see, in operating activities, 2A will come interest paid on long term loans by a finance company. Here it is interest paid is your outflow under the operating activities. Interest received is the inflow under the operating activities. Dividend received is the inflow under the operating activities. Purchase of investment by a finance company is the outflow under the operating activities. If you see the inflow and outflow. In investing activities, dividend received is the inflow under the investing activities. Interest received is the inflow. Dividend received is the inflow. Purchase of investment is the outflow under the investing activities. Purchase of investment by a non-finance company is the outflow of cash and cash equivalent under the investing activities. Under the financing activities, interest paid is outflow. Interest paid on long-term loans by a non-finance company is the outflow under the financing activities. Bank overdraft, it has not given whether it is increasing or decreasing. If it is increasing, then inflow, and if it is decreasing, bank overdraft is decreased, then it is outflow. And cash and cash equivalent, bank balance, short-term deposits in bank, and marketable securities. Now coming to the next question. Classify the following transactions as operating activity, investing activities, financing activities, and cash equivalent. So start with the purchase of share. When we purchase the share, so purchase of share comes under which activities? We purchase the share, it means it's an investment. It comes under the investing activities. When we purchase the share, it's an investment. So purchase of share comes under the investing activities. Purchase of shares, it's an investment. Purchase of shares or purchase of debenture of another company, it's an investment. Next is buyback of equity share. We purchased our own shares from the market, so it's a financing activities. Buyback of equity share is a financing activities. Buyback of equity share, equity shares, it's a financing activities. Buyback of equity share, we purchase our own shares from the open market. Okay, so we are going to restructure our capital structure, is going to restructure. So buyback of equity shares, okay, it's a financing activities, outflow under the financing activity. Payment of share issue expenses, it is related to financing activities. Third one is payment of share issue expense. Payment of share issue expense is the financing activities. Next is discount allowed to customers. It's a operating activities. It is the main operation of the business. We are on that time we allowed the discount to the customer, we received the discount from the supplier. These are the main operating activities. So fourth number is discount allowed to customer. It's a operating activities. Discount allowed to customers. Discount allowed to customers, it's a operating activities, coming under the operating activities. Similarly, discount received from the supplier, this is also coming under the operating activities. Discount received, discount received from suppliers, from the supplier. So this comes under the discount received from supplier, comes under the operating. Next is increase in the balance of cash credit. So coming under the financing activities. This is point number 6. Increase in the balance of cash credit. So here it is a inflow of cash. Under the financing activities, it comes under the inflow of cash. Increase in the balance, increase in the balance of cash credit. Okay, next is 7th, repayment of long-term loans. We repay the amount, so this comes under the financing activities. Repayment of long-term loan, repayment of long-term loan, this comes under the financing activities, and here the cash outflow under the financing activities. Repayment of short-term loan, this also comes under the financing activities. Repayment of short-term loan, this also comes under the financing activities. Next is proceeds from short-term borrowings. Proceeds from means sale of short-term borrowings. Okay, sale of short-term borrowings, this is also comes under the proceeds from the short-term borrowings. So this comes under the financing activities. Proceeds from short-term borrowings. Company has taken short-term loan. So it's a inflow under the financing activities, short-term borrowings. Okay, short-term borrowings coming under the inflow under the financing activities. Next is dividend paid on preference shares. Dividend paid on preference shares. When we pay the dividend, this comes under the financing activities. Dividend paid comes under the payment of dividend. Dividend paid on preference shares or equity shares. These all come under the financing activities. Under the financing activity, it is outflow of cash and cash equivalent outflow. Short-term deposit in bank. Short-term deposit in bank is a cash equivalent. It's a cash equivalent. This comes under the cash equivalent. Short-term deposits. Short-term deposit in bank. Short-term deposits in bank. This comes under the cash equivalent. Next is rent received by a company whose main business is real estate business. If the real estate business is real estate, so rent received by that type of company coming under the operating activities, because it's the main revenue generating activities of the real estate. So that will come under the operating activities. Number 12, rent received by a real estate company. Rent received by a company whose main business is real estate business. For them it's a operating activities, because it's a principal revenue generating activities. But the same is rent received by a company whose main business is manufacturing. For them it is a investing activities. For them it comes under the investing activities. Rent received by a company whose main business is manufacturing, then this comes under the investing activities. They have invested that amount and rent is earning. So for them it is a investing activities. Is it clear? This classification is clear. Now come to the next question. This question is based on to find out cash inflow, whether this transaction inflow the cash or this transaction outflow the cash, or there is no flow of cash. Do you know when the cash and cash equivalent flow? Cash and cash equivalent only flow when one side of the transaction, you know there is a two side of a transaction, debit and credit. So one side of the transaction, whether debit or credit, must be cash and cash equivalent. But another side of the transaction may be the non-current, excluding cash and cash equivalent, and non-current item. Once again, one side of the transaction, whether debit or credit, must be cash and cash equivalent. but opposite side of the transaction, opposite side must be current excluding cash and cash equivalent or non-current item. Then only the cash and cash equivalent will flow, cash will flow. If both side of the transaction is cash and cash equivalent, debit and credit, it means there is no flow of cash. And if both side of the transactions are non-current, then also the cash will not flow. So we'll try to understand through this question under this transaction, which transaction inflow the cash, which transaction result the outflow the cash. So the question is, state the following would result in inflow, outflow of cash and cash equivalent. Result in inflow, outflow of cash and cash equivalent. So I have drawn the three column: cash equivalent inflow, cash equivalent outflow, and third one is no flow of cash and cash equivalent. No flow. This one is for when it is no flow of cash and cash equivalent. No flow. Is it clear? No flow of cash and cash equivalent. So if the cash will inflow, then we'll write here. If cash and cash equivalent, we'll write over here. And if there is no flow of cash and cash equivalent from that transaction, then we'll write that side at the end. So the first one is purchase of goods on credit. When we purchase the goods on credit, so what the entry is? Purchase account debit to suppliers account. Here neither on debit nor on credit there is a cash and cash equivalent. So there is no flow of cash in this transaction. There is no flow of cash. There is no flow of cash in these transactions. Number one is no flow of cash when we purchase the goods on credit. Purchase the goods on credit. Purchase of goods on credit, there is no flow of cash and cash equivalent, because you know the entry purchase account debit to suppliers account. So in this transaction, cash and cash equivalent is neither on debit nor on credit. So there is no flow of cash and cash equivalent. Sale of goods costing 20,000 for rupees 15,000. When we sold the goods, so there is an inflow of cash inflow. Yes. So second one, cash inflow. Second one is cash inflow. So inflow is how much? Inflow, it's an inflow by rupees 15,000, because we have sold the goods costing rupees 20,000 for rupees 15,000. So 15,000 is the inflow, and this comes under which activity? Sale of goods, operating activities. This comes under which activities? This comes under operating activities. Yes, sale of goods. Inflow under which activities? Inflow under operating activities. Purchase of fixed assets on long-term deferred payment system. We have purchased the fixed assets. Fixed assets is a non-current item and we have not paid the amount because it's a long-term deferred payment basis. So there is no flow of cash. There is no flow of cash in point number 3rd. In this transaction, no flow of cash. Purchase of fixed assets. Purchase of fixed assets on long-term deferred payment system. It means payment is not done. So if the payment is not done, so there is no outflow of cash. Deferred payment system. Payment system is what? It's a deferred payment basis. Deferred payment basis. Okay. So this comes under the no flow of cash and cash equivalent, because both side is non-current. Issue of share against purchase of fixed assets. We have issued the share for the purchase consideration of fixed assets. We purchase the fixed assets, and for the payment of the purchase consideration of the fixed assets, we have issued the share. So fixed assets is a non-current item and share is also a non-current item. So there is no flow of cash. No flow of cash. Fourth number, purchase of fixed assets, sorry, issue of shares. Issue of shares against what? Against purchase of fixed assets. So both side is non-current item. Issue of share is non-current and purchase of fixed assets is also non-current. So there is no flow of cash. For flow of cash, there must be a one side cash and cash equivalent of a transaction, but on another side maybe the current item excluding cash and cash equivalent or non-current item, then only the cash will flow. Next is cash receipt from a trade receivable. Discount allowed 1000. So cash receipt from a trade receivable, it's a inflow. This one is point number 5. Its result is inflow. Inflow how much? Inflow 9,000 rupees. 9,000 will inflow because discount received is 1,000. Discount received is cash received from a debtor's cash received from a trade receivable 10,000. Allowed discount. It's a allowed discount rupees. It's a 10,000. It means it's a after allowing discount rupees 10,000. Cash received is this much. So this comes under which activity? This comes under the operating activities. Inflow under the operating activities. Next is sale of fixed assets, book value 25,000 for rupees 20,000. Sale of fixed assets comes under which activities? Comes under sale of fixed assets, inflow. It's an inflow. 6 number, it's an inflow. Sale of fixed assets, it's an inflow. Okay, inflow rupees 20,000. This comes under which activities? Investing activities. Investing activities. Sale of fixed assets comes under the investing activities. Inflow of cash rupees 20,000. Next is old furniture 10,000 written off, write off. So there is no flow of cash because it is written off. Old furniture is write off. So this one is point number 7. Old furniture write off. Old furniture write off. It is written off. Old furniture written off. It means there is no flow of cash. No flow of cash. Next is bills receivable endorsed to trade payables. It is also no flow of cash because bills receivable is endorsed to the creditors. So creditors account debit to bills receivable account. So there is no flow of cash. Here also in point transaction number 8, bills receivable endorse means transfer, endorse to whom? Endorse to trade creditors. Trade creditors. So there is no flow of cash because no payment is done Creditors account debit to bills receivable will be the entry, so there is no flow of cash. Discount rupees 2000 received while making payment to a creditors. Discount received while making payment to a creditors, so this will come under the outflow. This is point number 9. Discount received rupees 2000, okay, discount of rupees 2000 received, discount of rupees 2000 received while making payment to creditors of rupees 20,000. It means outflow is how much? Outflow is, here the outflow is rupees 18,000. Discount received while making payment to creditors, so outflow is 18,000 is the outflow of cash. Under which activity this will come? This will come under the outflow under the operating activities. If you want to know the which activities, then it is come under the operating activity. Okay. Next is cash deposited into bank. So entry is bank account debit to cash account. Both side debit and credit is cash and cash equivalent. So there is no flow of cash. When both sides of the transaction is cash and cash equivalent, then there will be no flow of cash. So this one, your cash deposited into bank, it means no flow of cash deposited into bank. Why there is no flow? Because both sides of the transaction is cash and cash equivalent, debit and credit, bank account debit to cash account. So there is no flow of cash. Cash will only flow, only one side must be cash and cash equivalent, but other side of the transactions may be the current, but in current item there should not be cash and cash equivalent or non-current item. Next is sale of marketable securities for cash. Here also the cash will not flow. Sale of marketable securities. Sale of marketable securities. Sale of marketable securities. Marketable securities. For cash. Sale of marketable securities for cash. So here also both sides of the transaction is cash and cash equivalent. Marketable security is cash and cash equivalent. Cash is also cash and cash equivalent. So there is no flow of cash. Sale of long-term investment. So it's a inflow. Inflow. Which one? Point number 12. Transaction number 12. Sale of long-term investment. Sale of long-term investments for cash. It's an inflow. It's a inflow. This comes under which activities? This comes under the investing activities. This comes under the investing activities. Inflow under the investing activities. Sale of long-term investment for cash. This comes under the investing activities. Inflow of cash under investing activities. Conversion of debenture into share. Debenture is converted into share. Okay. Debenture is converted into shares. So shares capital account debit to debentures. So both side is non-current. So cash is not flowing in this transaction. So conversion of this will come here. Point number 13. Conversion of debenture into shares. This will come under there is no flow of cash because entry is what? Debenture, conversion of debenture into shares, or debenture account debit to share capital. So both side is non-current. Next is declaration of conversion of debenture into shares. Declaration of dividend. When we declare the dividend, there is no flow of cash. It is only a declaration of dividend, no flow of cash. Declaration means no flow of cash because dividend is not paid. It is only a declaration of dividend. Dividend is not paid. So declaration doesn't affect the flow of cash. Next is payment of dividend. Payment of dividend is an outflow. Payment of dividend, point number 15. Payment of dividend is the outflow. Payment of dividend. Payment of dividend, it's an outflow of cash. Outflow of cash, and this comes under the financing activities. Financing activities. Is it clear? Financing activities. Next is receipt of interest on investment. Receipt of interest on investment is the inflow. It's a 16 inflow. Receipt of interest. Receipts of interest on investment is an inflow. Okay, it's an inflow. And under which activities? Receipt of interest, it's under the investing activities. Investing activities, inflow under the investing activity. Okay, the last one is receipt of dividend. This is also inflow. 17, receipt of dividend. Receipt of dividend. Dividend is received. This also comes under the investing activities. Investing activities. This comes under the investing activities. Receipt of dividend. Payment of dividend is financing activity. So receipt of dividend, it's an inflow under the investing activities. Is it clear? It's an inflow under this activities. Okay? Is it clear? Now come to the next question. Here we will calculate the cash flow from operating activities. So question is, calculate cash flow from operating activities from the following balances. So balances is given of two consecutive year, 2017 and 2018. So informations are debtors, bills receivable, creditors, outstanding expenses, bills payable and accrued income. This information is given to you of two consecutive year, 2017 and 2018. And at the bottom of the question, you see operating profit before working capital changes has given, that is 1,30,000. So we'll start with the operating profit before change in working capital. Operating profit before change in working capital, before change in working capital. So the operating profit before change in working capital, this is clearly given in the question, 1,30,000. After that, what we do, we add decrease in current assets, decrease in current assets and increase in current liability and increase in current liabilities. Vice versa, what we'll do, we'll deduct increase in current assets, increase in current assets I have written in short, and decrease in current liability. Decrease in current liability means it is paid. Increase in current assets means it is purchase. Decrease in current liability. Okay. Now we will see. Here, first one is debtors. In 2017, debtor is 50,000 and in 2080 it is 40,000. It means it is reduced by 10,000. So debtor is a current asset. Debtor is decrease. So decrease in current assets we will write over here. So sundry debtors decrease. Debtors is decreased by how much amount? Debtors is decreased by 10,000. Okay, debtor is decreased by 10,000. Decrease in current assets. Okay. Next is bills receivable. In 2017, bills receivable was 10,000 and in 2018 it is 12,500. So bills receivable is a current assets. It is increased by 2,500. So increase in current assets. We will write it over here, bills receivable. Bills receivable is increased by 2,500. Okay. Now next, creditors is the current liability. In 2017 it was 25,000 and 2018 it is 20,000. So creditors is decreased by 5,000. So decrease in current liability, we will write it over here. Creditors is decreased by how much amount? It is decreased by 5,000. Next you see outstanding expenses. It's a current liability. Last year 2017 outstanding expenses was 800 and now it is 1,000. So it is increased by 200. So increase in current liability, we will write it over here. Outstanding expenses is the current liability. Outstanding expenses is increasing by 200. It is increased by 200. Next come to bills payable. Bills payable is the current liability. Last year it was 40,000 and this year it is 25,000. So bills payable is decreased by how much amount? From 40,000 to 25,000 it becomes. So it is decreased by 15,000. So decrease in current liability. We will write it over here. Bills payable. It is decreased by how much amount? It is decreased by 15,000 from 40,000 to 25,000. Now accrued income. Accrued income is the current assets. So accrued income last year it was 6,000 and now in this 2018 it is 7,000. So it is increased by 1,000. So increase in current assets. So we will write it over here. Accrued income. It is accrued income increased by 1,000. It is increased by 1,000. So total is how much? It is increased 0, 0, 5, 12, 13, 3, 1, 23,500. So this we have to deduct. So in bracket, and there is a 2 item which we have to add, that is 10,200. We have to add it. So when we add it with the previous figure, so 002 041 1,40,200, and thereafter what we do, we'll deduct it from this amount. So 007, okay, 611 1,16,700. So 1,16,700 is what? It's a cash flow from operating activities. Cash flow from operating activities. This is cash flow from operating activities. This one, 1,16,700. This is in amount in rupees. Amount in rupees. Okay, amount in rupees. Okay, amount in rupees. So is it clear how to calculate the cash flow from operating activities? So operating profit before change in working capital will add decrease in current assets and increase in current liability, and vice versa will be deducted. Increase in current assets and decrease in current liability will be deducted to know the cash flow from operating activity. Now see the next question. Same type of question, calculation of cash flow from operating activities from the following informations. So question is, calculate cash from operating activities from the following figures. Here two consecutive year information is given, 2017 and 2018. Operating profit before working capital changes, and thereafter trade receivable, inventories, prepaid expenses, accrued income, trade payables, outstanding expenses, income received in advance. So you have to calculate from the following information, you calculate the cash flow from operating activities. So first one is operating profit before change in working capital is given. Operating profit before change in working capital, which is given 1,50,000. 1,50,000. Okay. Thereafter what we do, decrease in current assets and increase in current liability we will add. We'll add decrease in current assets and increase in current liability, and vice versa we will deduct what? Increase in current assets and decrease in current liability will be deducted by us. Now see, trade receivable is current assets. So last year trade receivable was 3 lakhs, and this year the trade receivable is 3,36,000. It means it is increased by 36,000. So increase in current assets. So increase in current assets we will deduct it. So we'll write it over here, trade receivable. So trade receivable is increased by how much amount? It is increased by 36,000 from 3 lakh to 3,36,000. Last year it was 3 lakhs, this year it is 3,36,000. So trade receivable is increased by 36,000. Next is inventory. Last year inventory means stock, is 2 lakhs last year, and this year in 2018 it is 1,80,000. So it is decreased by 20,000. So decrease in current assets we add it. So inventory we will add. Inventory we will add. Why we are going to add? Because it's a decrease in current assets as compared to the last year. So last year it was 2 lakhs, now this year it is 1 lakh 80, so it is decreased by 20,000. Decreased by 20,000. Next is prepaid expense. Prepaid expense is also a current assets. Prepaid expense, current assets. Last year in means 2017, this was 20,000, and in the 2018 it is 25,000. So it is increased by 5,000. So bills, prepaid expenses is increased. So increase in current assets, prepaid expenses. We'll write it over here. Prepaid expenses. Prepaid expenses, current assets, and here the current assets is increased by 5,000. Increased by 5,000. Next is accrued income. Accrued income is also a current assets. Income earned but not yet received is called accrued income. Okay. So prepaid expense is clear. Prepaid expense. Here the prepaid expense is increased by 5,000. So increase in current assets. Prepaid expense 5,000. Next item is accrued income. Accrued income is a current assets. Accrued income is what? It's a current assets. Accrued income means income earned but not yet received. It's a current assets. So accrued income last year it was 8,000 in 2017, and in 2018 it is 6,000. So accrued income is reduced, means current assets is reduced. So decrease in current assets, we will write it over here. Accrued income. Accrued income. Accrued income is increased by, accrued income is decreased by 2,000. It is decreased by 2,000. Decrease in current assets. Decrease in current assets. Accrued income is your current assets, and here current assets is decreased by 2,000 from 8,000 to 6,000. Previous year it was 8,000 and this year it is 6,000. So it is decreased by 2,000. So decrease in current assets, we will add it. Next is trade payable. Trade payables is a current liability. Trade payables, under the trade payable, bills payable and sundry creditors both comes under the trade payables. Okay, so trade payable is a current liability. So last year trade payable was 1 lakh, and this year in 2018 it is 1,40,000. So trade payable is increased. So increase in current liability, we will add it. Trade payables, we will add. Trade payable, we will add, because it's a increase in trade payables by how much amount? By 40,000, because it's from 1 lakh to 1,40,000, it becomes 1,40,000. So increase by 40,000. Next is outstanding expense. Outstanding expenses is a current liability, means we have availed the services but amount is not yet paid. So it's a current liability. Outstanding expense in 2017 was 32,000. And this year it is 26,000 in 2018. So it is decreased by 6,000. Outstanding expense is decreased. So current liability, decrease in current liability, we will write it over here. Outstanding expenses. Outstanding expenses. It is going to decrease. It is decreased by how much amount? It is decreased by 6,000. Next is income received in advance. Income received in advance, it's a current liability, means it's an unearned income, or you can say unexpired income. It's a current liability. So last year it was 3,000, and in 2018 it becomes 2,000. So it is reduced by 1,000. So current liability is reduced, decrease in current liability. Income received in advance. It's a current liability. It is decreased by 1000. So total is 48,000. We'll deduct it and this we will add it. Okay, it is 62,000. So 0, 0, 0, 2, 1, 2, 2,12,000, and thereafter we'll deduct 48 from this figure. So this is 0, 0, 0, 4, 6, 1, 1,64,000. So this is 1,64,000 is your cash flow from operating activities. It's a inflow. Cash flow from operating activities, it's a inflow. It's a cash inflow from operating activities. It's a cash inflow from operating activities. Cash flow from operating activities, because figure is in plus. If the figure will be in minus, then we will read cash used in operating activities. So here the figure is in plus, so it is cash flow from operating activities. Now come to the next question. Here also we will calculate the cash flow from operating activities. So calculate cash flow from operating activities from the following. Here the information is profit made during the year 2,50,000 after considering the following items. The items are depreciation on fixed assets, amortization of goodwill, loss on sale of machinery, profit on sale of land. Thereafter, additional information is given of two consecutive years, 2017 and 18, regarding the trade receivable, trade payables and prepaid expense. From these information, we have to calculate cash flow from operating activities. So start with the profit made during the year. So profit, net profit during the year, net profit during the year. We'll write the net profit during the year. The net profit is, how much is the net profit? 2,50,000 is the net profit. 2,50,000 is the net profit. Okay, 2,50,000 is the net profit. Okay, 2,50,000. We will add what? We will add non-cash expenses, and non-operating expenses and losses. Non-operating expenses and losses will be added by us. What we will add? Non-cash expenses and non-operating expenses and losses, and we will deduct non-operating incomes and gains will be deducted. Incomes and gains we will deduct. Non-operating incomes and gains we will deduct. Okay, this is the first step. So you see, depreciation on fixed assets is given. Depreciation is a non-cash expense. So non-cash expense depreciation, we will add it, because this profit is after considering these all four. So we'll add the depreciation on fixed assets, we will add. Depreciation on fixed assets we will add. So depreciation is how much? Depreciation on fixed assets is 10,000. So we'll do the addition of this 10,000. Okay. Next is amortization of goodwill. Goodwill is amortized, means goodwill is write off. This is also a non-cash expenses. Amortization of goodwill. For intangible assets, we use the word amortization in place of depreciation. So amortization of goodwill. Goodwill is intangible assets which is amortized, means which is write off by, it is write off by 5,000. So it's a non-cash expense. Amortization of goodwill is also a non-cash expense. Then loss on sale of machinery, it's coming under non-operating losses. Loss on sale of machinery. Loss on sale of machinery. It's a non-operating losses. Is it what? Non-operating losses will be added. Non-operating expenses and non-operating losses we will add it. And non-operating expenses and losses. So loss on sale of machinery is non-operating loss. So it is 7,000. Thereafter, profit on sale of land is a non-operating incomes and gains. It is non-operating gains. So we will deduct it. Profit on sale of land. Sale of land, we will deduct it. So it is how much? It is 3,000. Profit on sale of land is 3,000. So this will we add. So we are going to add 22,000. Yes. Now it is 2,72,000. This we will deduct 3,000 in minus. This is what? In minus. So it is 0,00962. 2,69,000. 2,69,000. So this is operating profit before change in working capital. This is what? Operating profit before change in working capital. So this is operating profit before change in working capital. So we'll write it over here. Operating profit before change in working capital. Before change in working capital. Working capital. Before change in working capital. Now come, you add. What will add? Decrease in current assets and increase in current liability. Okay, this we will add, and we will deduct less, vice versa, increase in current assets and decrease in current liability. This we will deduct. Okay, this we will deduct. So the further information, additional information in this question is trade receivable. Trade receivable means debtors and bills receivable, they jointly known as trade receivables. So trade receivable is current assets. So trade receivable last year is 22,000 and this year it is 23,000. So it is increase. So increase in current assets. Increase in current assets will deduct it. So we'll write trade receivable over here. Trade receivable. This will deduct. Trade receivable is increased by 1,000. It is increased by 1,000. Okay. Next is trade payables. Under trade payable, both creditors and bills payable come under the trade payables. So trade payables means creditors and bills payable, jointly known as trade payables. Trade payable is current liability. So here the last year trade payable was 15,000 and this year in 2018 it is 10,000. So it is decreased by 5,000. So decrease in current liability. Decrease in current liability. So trade payables is decreasing. Trade payables. Here it is decreasing. Trade payables is decreasing by from 15 to 10,000. It is decreased by 5,000. So this will also deduct. Next is prepaid expenses, means expenses paid in advance. It's in current assets. Current assets means prepaid expense last year 6,000 and this year it is 4,000. It is also decreased. Decrease in current assets. So we will write it over here. We add it. Prepaid expenses, we will do the additions. Prepaid expenses, because it decreased. Prepaid expense is decreased by 2,000. So we will do the addition. That's it. So we will do the addition, the prepaid expense on this. So after addition, the figure is 2,71,000 and thereafter we will deduct 6,000. 6,000 will be deducted by us. This amount we will deduct. Okay, this amount we will deduct 6,000. So the figure is 0,00562. 2,65,000 after deduction. So we may write this amount this side, 2,65,000 in the main column, 2,65,000 in this column. In this column we will write it. Okay. So this is what? This is cash flow from operating activities. Cash flow from operating activities. This one. Cash flow from operating activities 2,65,000. Okay. Now come to the next question based on calculation of cash flow from operating activities. So question is, on March 31st, 2018, Ramesh and company indicated profit of rupees 1,25,000 after considering the following. What are the items which is considered? Depreciation on building, depreciation on plant and machinery, mortgage, amortization of goodwill and gain on sale of machinery. Thereafter, additional information is given regarding some items for the two consecutive years 2017 and 2018. The informations are trade receivable, inventory, cash in hand, trade payables, expenses payable and bank overdraft. Ascertain the net cash flow from operating activities. Okay, so start with the net profit. 1,25,000 is given at the top. Ramesh and company indicate a profit of rupees 1,25,000 after considering this. So net profit for the year is 1,25,000. This is the net profit. In this net profit, you add non-cash expenses and non-operating expenses and losses. Non-operating expenses and losses, you add it. Okay? What to add? Non-cash expenses and non-operating expenses and losses, and deduct non-operating incomes and gains if any. Then add decrease in current assets and increase in current liability, and vice versa, increase in current assets and decrease in current liability will be deducted. So start with this question. Depreciation on building is a non-cash expense. So depreciation on building, this we will add. Depreciation on building. Depreciation on buildings is 25,000. This we will add. It's a non-cash expenses. Similarly, depreciation on plant and machinery. Plant and machinery. This is also a non-cash expense. Plant and machinery. This is also a non-cash expense. It is 45,000. Means depreciation on tangible assets. Thereafter, amortization of goodwill. It means depreciation on intangible assets. Amortization of goodwill. Amortization of goodwill. Goodwill is intangible assets. So depreciation on intangible assets, here the word will be used amortizations. It is 20,000. It's a non-cash expense. It's also a non-cash expense. And gain on sale of machinery, it's a non-operating gain. It's a coming under non-operating then gain. This will deduct. So gain on sale of what? Sale of machinery. This we will deduct. This is how much? 10,000. This we will deduct. So this one is total A. This total is 90,000. Yes, it is 90,000. 90,000. So add this one. So 0,005 1 to 2,15,000. Thereafter what you do? You deduct it. 10,000 you deduct. 10,000 you deduct it. So this is 0,00502. Yes. So this is what? After deduction, this is called operating profit. Operating profit before change in working capital. Before change in working capital. Is it clear? This is called operating profit before change in working capital. Now come to the additional information. Trade receivable. Trade receivable, as I already explained, both bills receivable and debtors comes under the trade receivable. It is jointly known as trade receivable. Okay, it's a current assets. So last year it was 35,000 trade receivable in 2017, and in 2018 it is 45,000. So it is increased by 10,000. So increase in current assets will be decreased, will be deducted, will deduct, and if it is decreased then we will add. So here the current assets, your trade receivable is increasing. Trade receivable is increasing by 10,000. This will deduct. Okay. Next is inventory. Inventory on hand. Inventory is your current assets. So last year it was 75,000 in 2017, and 2018 it is 69,000. So it is decreased by 6,000. So inventory, current assets is decrease in current assets. So inventory is decreasing. It is decreased. Inventory has decreased by has decreased by how much amount? It is decreased by 6,000. We will add it from 75,000 to 69,000. Cash in hand, it's a cash equivalent coming under the cash and cash equivalent. This will not be taken into account. This is not coming under any activities, operating, investing and financing. Okay, cash in hand is a separate, it's a coming under the cash and cash equivalent. Trade payable is a current liability. So last year it was 30,000 and this year it is 32,000. So trade payable is increased, current liability has increased. So increase in current liability. So trade payable, we will add it, trade payables. We'll do the addition of trade payables. Trade payables is increased by how much amount? It is increased by 2,000. It is increased by 2,000. Okay. Next, after trade payable, bank overdraft. Bank overdraft coming under the financing activities. It is not under the operating activities. And here we are going to find out the cash flow from operating activities. And bank overdraft and cash credit under the finance. These are coming under the financing activities. So okay. So this we will add 8,000. We will do the additions. After addition, this figure is 00031 to 2,13,000, and this one we will deduct it 10,000. We will do the deduction. After deduction, the figure is 00030 to 2,03,000. 2,03,000. Okay, 2,03,000. So after trade payables, expense payable is there. Expense payable, last year expense payable was 10,000 and in 2018 it is 5,000. So it is decreased. Expense payable means outstanding expenses. It's a current liability. So current liability is decreasing. So expense payable, expenses payable means outstanding expense is called expense payable. It's a current liability and it is decreased by 5,000. It is decreased by 5,000. So the total is, here 8,000 is the total. We'll do the addition. So it is 2,13,000 and here we'll deduct 15,000 from that. Total is 15. So it is 0,00891, 1,98,000. So cash flow from operation, cash flow from operating activities is 1,98,000. I am going to write it in the outer column. 1,98,000. This is the cash flow from operating activities. Is it clear? Now come to the next question. Okay. Z Limited made a profit of rupees 20 lakhs after charging depreciation of rupees 1,50,000, writing off preliminary expenses rupees 10,000 and loss on sale of assets rupees 30,000. Other information available to you are as follows. At the end of the year, trade payables saw an increase of rupees 45,000. Trade payables saw an increase of rupees 45,000. Trade receivable an increase of 53,000. Prepaid expenses decrease of rupees 2,000 and outstanding expenses decrease of rupees 10,000. Here increase and decrease is directly given in the question. No need to calculate the increase and decrease. Here the increase and decrease figure is directly given in the question. You are required to ascertain cash flow from operating activities. So I have already drawn the format. Net profit during the year, it has given, it is 20 lakhs. 20 lakhs is the net profit during the year. It is how much? 20 lakhs. Okay. Non-cash expenses, will add non-cash expenses, and non-operating expenses and losses will be added, and non-operating incomes and gains will be deducted. Okay. Decrease in current assets and increase in current liability will add, and vice versa, increase in current assets and decrease in current liability will be deducted by us. So come to the non-cash expenses. Here it is given, depreciation is given. Depreciation is a non-cash expenses. It has given, that is 1,50,000 is the depreciation amount. 1,50,000 is the amount of depreciation. Then writing of preliminary expenses, it's also a non-cash expenses. Writing of preliminary expenses. So preliminary expenses written off. Written off. It's a non-cash expense. It is written off 10,000. Next information is loss on sale of assets. It's a non-operating loss. Non-operating losses. So loss on sale of assets. It's a non-operating loss. It is 30,000. Okay. Thereafter, no information is related to non-operating incomes and gains. There is no information is given. No data is available over here. Okay. There is no non-operating incomes and gains. So what you do? You add 0,0,0,091. 1,90,000. 1,90,000. You add it. So 0,0,0,0,912. 21,90,000 you add it. 21,90,000. There is no non-operating incomes and gains. Okay. So the figure is, this figure is 21,90,000 is operating profit before change in working capital. Now thereafter we will see the change in working capital. So for that, informations are, at the end of the year, trade payable means current liability. Trade payable is a current liability. Short and increase means current liability has increased. So increase in current liability, we will add it. So trade payable will add. We will add the trade payables. Trade payables has increased by 45,000. This amount is directly given. Short an increase of 45,000. Trade receivable, it's a current liability, an increase of 53,000. Trade receivable, current assets. So it is increased. Trade receivable is increased. So deduct. Trade receivable will be deducted because it's an increase in current assets. So it is 53,000. We will deduct it. So bracket. Next is prepaid expense decrease. Prepaid expense is current assets. Prepaid expense is current assets. Expenses paid in advance. Prepaid expenses, you know it. It's a current assets. So decrease in current assets. Prepaid expense decreased by 2,000. So we will add it. We will add. Next is outstanding expenses. It's a liability. Outstanding expense is what? It's a liability. Decrease. So decrease in liability. Decrease in current liability. Outstanding expenses. Outstanding expenses, it's a current liability. It is decreased by how much? It is decreased by 10,000. Current liability decreased by 10,000. That's it. There is no other figure. So what you do, you added 47,000 we will add to the previous figure. Then it is 0,00732, 22,37,000. Then we will deduct 63,000 from it. 63,000 we will deduct it. So the figure is 0,04712, 21,74,000, 21,74,000. So this is cash flow from operating activities. This figure we will write it in the outer column, 21,74,000. In this column we will write it. In this column we will write it cash flow from operating, cash flow from investing and financing. Thereafter additions. In this figure we will do, in this column we will do.